Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today's Tuesday. It's June 29th. We're headed into July. 4th of July holiday weekend is just around the corner. Now, before we get into all of the juicy stuff, make sure to like this channel if you're watching it on YouTube Wealth Press. Also, remember something. Sign up for my Telegram channel by going to the YouTube Wealth Press channel. There's a link there, or going to rogerscott.com/telegram. And I've opened up my VIP room to the public for a limited time. You could find the link below this video, whether you're watching it on the YouTube Wealth Press channel or you're watching it on the website. It may be above the video, I don't know. But I've got juicy stuff planned for all of you, and you're all invited to my VIP room, which starts today at noon. And if you can't find that link, again, go to the YouTube Wealth Press channel. The link doesn't change. It's there daily, and you can find Telegram link. Make sure to like these videos, subscribe to this channel, and post comments. That's where I get to answer your question in the YouTube channel. Now let's get into all of this. What are we waiting for? Wasting your time here in the morning. So Nasdaq is opening up pretty good today, about 55 points. Yesterday, markets weren't so strong, and the Dow is down only 26 points, which is really random. Now, let's talk a little bit about what to expect today before we get into all the nitty-gritty. So first of all, we've got earnings on Walgreens. WBA is the ticker symbol. They are expecting a $1.08 per share, which is up about 12.5% year over year on revenue of $34 billion, which is up 4.9%. I think they're going to come a little bit lighter than expected. And then tomorrow we've got General Mills, we've got Micron, you've got H.B. Fuller, BlackBerry, National Beverage, and on Thursday you've got Nike, the big Nike, which is going to set the tone for consumer discretionary stocks, in my opinion. Now, I hate to say I told you so, but technology sector has been going down pretty good. It's been going down, let's see here, 4 out of the last 6 days. And even on the 5th and 6th day, it didn't really rally very much. And it looks like the party's over. Now, the 5-day RSI is still at 35. It can go all the way down. What I'm expecting is a little more downside, probably to the 163 level here, maybe 164, and then it'll consolidate and then start coming down to the base. If you look at the communication service sector, it looks exactly the same way. Same thing. It doesn't look very strong. Now, we could chop for a while here, but after coming to these overbought levels, I think we need to come to the oversold levels before even thinking of going higher, which means there's a really good chance we're going to go down to the 62.50 and then drop all the way down to the base. Now, on the upside, and earnings, today you've got a lot of, not earnings, but you've got data on the real estate sector. Keep your eye on the real estate because it's been going choppy, and I think we've got a little bit more upside, and I'll talk about what to expect today because we've got some earnings. Now, to give you a confirmation that what I'm seeing in technology and communication services is not some fairy dust or some wild dreams of mine, because I'm completely neutral. I don't care if these things go up or down. I would actually prefer they continue moving higher, but I don't think that's the case. This is Kathy Woods. This is I call this the degenerate fund. This is small cap speculative stocks. And you can see here, it just went up here. It went here with the tech rally. And there's a lot of highly speculative tech stocks here. And you could see it's starting to sell off. And I'm not seeing any end in sight. I think this is going to go down all the way to the base. All right. So again, bond market, I don't think bond market we're going to see anything really crazy. I thought we were going to break out. I know we had some algos hit these levels right here, but I guess it wasn't enough. There's really no news on the bond market for the remainder. I mean, no major fundamental news on bonds. And it looks like things are steady for at least another 3-4 weeks in terms of interest rates. So I'm thinking with the tech stocks coming down, investors will put their money back into blue chips and bonds because there is added safety measure there. Now, let's talk a little bit about what to expect this week, what's going on with Wall Street, the upgrades, downgrades, and then I'll talk about my strongest stock, weakest stock, strongest sector, weakest sector, right? Wouldn't that make sense? And you may find that there's a little conflict there. So market participants are bracing for the next raft of economic data, speeches by policymakers, very important to gain insight into the outlook of the economy, and interest rates, which hopes that policy stimulus from China help boost market sentiment. The tech-heavy Nasdaq 100 underperformed the benchmark pressured by drop in communication services and technology. Now, Tesla plunged more than 6% after Goldman downgraded it. Alphabet, now remember something, Alphabet is in the communication service sector. Matter of fact, if you look at the communication service sector, and if you look at the constituents, sorry to go back and forth, but you will find that Google, A and C equal about 22%, 22% of the market cap in the stock. And T-Mobile hasn't been looking all that great, and Netflix is on the way down, and so is Verizon. So as far as I'm concerned, the communication sector is not looking all that great. Also, Carnival slumped, which I was very surprised because cruise ships have been doing very, very well lately. So there's a lot more to the downside right now, especially in light of the momentum levels we've seen in the last couple of weeks, that it looks to me like we're going to be going a little bit lower. There's just no major catalyst for the market to go higher. Now, the futures are now pricing in about a 77 almost percent probability of a 0.25 basis point hike, and that hasn't seemed to throw the bond market out of whack. Bond market is still reacting appropriately, and I think that's kind of priced in right now. And also the fact that the Fed said they may not be continuous in how they raise rates, they may be taking a little more time. I think that's going to cause the bond market to rally a little bit from the current levels. Again, I'm kind of going back and forth because I want you guys to have the full picture. Today we've got consumer confidence, and that's a major report. But remember, we've got GDP on Thursday, so it's one of those things. And you've got core durable goods that's coming out too. All eyes today are on the real estate sector because you got building permits coming out, and that's going to be pretty instrumental. So again, consumer stocks, communication stocks, technology stocks, and real estate stocks is where I'm focused right now. Europe this morning erasing most of the gains they saw earlier after Christine Lagarde waited on sentiment. Automobile stocks are under pressure today after a report that Volkswagen, one of the biggest car companies in the world, if not the biggest by market cap, they own Porsche, Audi, all that stuff, was planning to cut back production of one of its electric SUV models. I actually just got a Volkswagen for my daughter, one of those SUVs, and I'm loving it, but it's not electric. Shanghai closed sharply higher after their premier minister said that they're looking to roll out more effective measures to boost demand, which they need, while investors continue to monitor China-U.S. tension. Speaking of tension, Yellen is scheduled to visit Beijing early July for the first high-level economic discussion with her newly appointed Chinese counterpart, He Lefeng. Don't hold your breath on that one. We'll see how that one go. Japan is in negative territory after many of the country's leading technology companies experienced a sell-off on Tuesday, tracking overnight declines from the U.S. They're keying off of us. Snowflake got a positive boost. Kellogg's got a positive boost. We'll see how that impacts consumer staples, which have not been doing all that great, unfortunately. And I really hope they would, but they will. It'll just take a little bit of time. And Alphabet got another downgrade. And remember, Alphabet is in the communication sector, 23%, as we just saw right here, about 22.5%. So again, you got to be really careful. And as I mentioned, we've got Walgreens coming out with earnings. As far as sectors, if you look at it on a monthly basis, you will see that, let's see here, one second. You will see here that communication services is falling off and industrial and basic material have taken its place. I'm expecting the same thing to happen with technology. I'm expecting all of this to come a little bit lower, but I am expecting real estate to start going up because most of the downside is already priced in, and it looks like real estate are going to be on the back, interest rates are going to be on the back burner for the time being. Now, if you look at this cumulatively, you'll see that technology, communication, and consumer discretionary are still leading. But again, things are not looking as good as they did. Like communication services, this month only 2.34%. I mean, materials saw 2.91, and industrial saw 4.38. So on a monthly basis, we're definitely starting to see some cracks in the foundation of technology because communication services is one of the three major technology, consumer discretionary, and communication services. So watch for the real estate market to start going higher and keep your eye on industrial and basic material. Maybe they won't be as strong, but I'm expecting consumer discretionary, especially with Nike earnings coming this week, and technology to see more downside. There's just no major catalyst for these assets to go higher right now. Now, in terms of what I'm liking right now, I'm not liking any of the tech stocks all that much right now. But I like how Royal Caribbean closed. It actually closed near the high. And I like how Carnival closed near the high. So honestly, I like Royal Caribbean's right now. RCL doesn't look all that bad. It doesn't. Tech does not look all that great right now. Look at this. AVGO looks like it's got more downside. Adobe looks like it's got more downside. Pulte looks like it may be topping out for the time being. Oracle looks like it's got more downside. So I'm not really liking what I'm seeing right now at all. Amazon still looks okay. It's still near the upper end of the range, but none of these stocks look really all that great right now. So what would I be looking at? I'd be looking at GE. I would be looking at Delta. And I would be looking at Royal Caribbean. With energy prices down, I think cruise ships, airlines, and industrial stocks can see more upside. So I like Delta to the upside, GE to the upside, and I like Royal Caribbean to the upside. Now to the downside, oh boy. What do I really hate? Let's see here. Dollar General does not look good right now. Dollar General does not look good right now. Etsy already fell. I talked about the stock going down earlier this week. It already fell down. Mosaic does not look good right now. VSF doesn't have a lot of space. But Mosaic does not look good right now. And Advanced Auto Parts and Dollar General. If I was a betting man, I would put Dollar General, Mosaic, those two. Probably those two. Let's see if there's any other culprits. Agilent Technology right here. I think it'll go down to about the 113, 114 level. So you have Dollar General, and you have Advanced Auto Parts to short. But one other stock, when things get weak, one of the things you want to do is you want to see the weakest stocks in the weakest sector. Nasdaq is right now taking it under the chin. So let's look and see what the weakest Nasdaq stocks are. Here we go. JD from 35 to 31, right there. You don't have to go very far. And also, I think that's about it. I think I've given you enough. Also, I'm not a big fan of T-Mobile right now. But honestly, JD does not look good at all. Plus Dollar General. And what was those other stocks that I gave you? It was right here. It was, where are they? Where are those stocks? Sorry, I'm going by the strongest. Let me go by the weakest again. Looking at the wrong spot. Okay, here we go. Dollar General, Mosaic, and Agilent. In addition to JD, which is the weakest stock right now, in my opinion. Actually, I don't even know. No, it's not my opinion. It's according to the CSI scan. It's the weakest stock, and it'll probably go from about 34 all the way down to about 31. You can get a good put on that, in my opinion. That's a good one right now. China's not doing all that great. I like it. Now, folks, before I let you go, and I want to make sure you visit my VIP room. The link is below or above this video. Now, before I let you go, I hope you didn't miss it, but if you did, my good friend T-Buzz, Tom Busby, he recently launched his weekend side hustle strategy, and he's already off to a roaring start. The first trade alert turned into a 24% winner in a matter of just a few hours. T-Buzz, he can't stop talking about this brand new way to trade ahead of the weekend, and he's going live today at 1 p.m. Eastern Time on Tuesday to break down exactly how it works. Save your seat at the link below and get your weekends back to go to do whatever it is that you want to do while this weekend side hustle takes care of the money side of things. And if T-Buzz is excited, I'm excited because T-Buzz knows his stuff. Remember, like this video, subscribe to this channel, subscribe to my Telegram at rogerscott.com/Telegram, and come to the VIP room. I'll see you guys at noon in my VIP room for more answers to your questions. Bye.